So these are the things so far. So it must be a depreciable asset. It must meet the residual deduction rule, and it can be deducted whether or not it is of a capital nature. Now, let's come to the rule proper. So I can call this the R and I rule, the repairs and improvements rule, right? So R and I to be deducted shall not exceed 5% of the written down value of the pool at year end. Which pool? The pool to which the asset belongs. The pool to which the asset belongs. Now, if you don't understand pool yet, it is something under capital allowance. We'll do it. Okay, don't worry. There are 5 pools we will look at. And then there's another pool for mining and then petroleum, upstream petroleum. But remember that the rule is that repairs and improvements, R&I, when I say R&I, it's basically me saying what R&I is repairs and improvements. Okay. So it shall not exceed 5% of the written down value of the pool at year end, not at year start. Please take note. So this is the first point. The second one, any excess disallowed repairs and improvements based on this 5% threshold, right, is what? Added to the depreciation basis of the pool. Is added to the depreciation basis of the pool for capital allowance to be recomputed. For capital allowance to be recomputed. Let me just simplify it for you again. So when we start doing capital allowance, this is how it's going to look like. You take so watch me carefully. I want to make it visual for you. Written down value brought forward. This is the opening balance of the pool or the assets in the pool, right? You add additions, if any, which is assets you bought. You less disposals of assets from the pool. You get what we call your depreciation basis. Then you charge capital allowance at whatever rate. So capital allowance at X%. Then, ladies and gentlemen, this gives you what we call written down value carry forward. I want you to visualize it. It is this guy right here that we apply the 5% on. Can you see? Before we start doing questions, right, I don't want you to learn solutions to a question. Understand the principle so that no matter how they twist it, you know what you are doing. We apply is 5% of this. 5%. Let me even change this one is to 5% of this written down value at year end is the limit for the deductible repairs and improvements. So the threshold is going to be on this amount. Now we are saying that whatever amount is above the 5% threshold will be re-added for capital allowance to be recomputed. So let me, for the sake of simplicity, I can do up to here. Copy. So let's say you've done the computation, right? You've done the computation. And then there was an excess repair. I'll give you an example. You spent repairs of, let's say, 10,000. But when you did the calculation, 5% of this figure here, 5% of this guy here, give you, let's say, 6,000. It is less than 10,000. So you disallow 4,000. Does it make sense? All I'm saying is that whenever you incur repairs expenditure, don't be in a hurry to deduct it. Come and find the pool to which the asset belongs, its closing balance. Find 5% of it, and that becomes your cap, your threshold for the repairs that can be deducted. So example I'm giving is that you spent 10,000 cedis on repairs. But when you did the math over here, the answer you got was 6,000. So it means that the excess of 4,000 cannot be deducted. Do you get me? Do you understand? So that is the amount that is disallowed. It's called excess repairs. We are saying that come and recalculate what I said here. Capital allowance to be recomputed. You come and now say my excess repairs. You add it here. Everything, all the figures here will be the same. Bring them the same ones here forward. And you now bring the excess. So in this case, it's the 4,000 that I just mentioned. I bring it here. And I'll recalculate capital allowance for the year. So I bring in my excess repairs. I get my depreciation basis, which is the net of all of these guys here. Then I find my capital allowance at whatever percent. Then I get my written down value carry forward. Yeah. Written down value carry forward proper for the year. So whenever the question gives you repairs and improvements, you do capital allowance twice. We have a question we'll solve that has this in there. But I want you to see this is what you bring your excess repair. This is it. Are we good? Whenever you incur expenditure to repair or improve an asset, which, like I said, has got to be a depreciable asset, meets the residual deduction rule, and then it doesn't exceed 5%. So if you do the math, and let's say 5% of the amount here gave you 15,000. Remember I said the repairs amount is what, 10,000? You can deduct the full 10,000 because it doesn't exceed the 5% threshold. So if the repairs amount is less than the 5% threshold, deduct everything as an allowable deduction. But if it is more, then you only allow up to the 5% threshold. The excess will come and add to the capital allowance calculation for it to be recomputed. Is it clear? Are we good?